Today we're going to be speaking about the weakening of the current trend here and how we're on track for a breakout. And that's in either direction, but it's just more so about the current levels that we're at right now. We're going to experience either a breakdown or an break up. And we can kind of see one that is forming here in Bitcoin, because you see kind of we're trending along the 14-day MA here. And this is kind of obviously Bitcoin is the indicator for the overall market. That's where most of the liquidity is. So we'll take a look here at some other coins in a moment, and you'll see that these movements on the daily here are getting smaller and smaller. This is kind of why you see like this bigger candle today. This is the same approach that you would use if you're about to have like a breakout in a wedge, or if you're breaking out of a zone or a pool of liquidity. These are the areas, these are kind of like the signs you look for a bigger movement. Once the movement starts to get more concise, you'll get kind of like a decision maker either way. And for right now on the daily, we'll see where we close at. But for right now, it's looking like it's going to be a green one from Bitcoin, and it's going to be a little larger than the previous like week or so. And it's going to be to the upside. Now, whether or not we get to that 72-day MA, we'll have to see when we close. We can check back tomorrow, but that is a good sign overall if you're looking for some stability or where we're at kind of like in a cycle. You're getting that break to the upside. Let's take a look here at Doge. Doge, we're getting a green one as well. You'll see that we are right above the 14-day, and we kind of have two factors here that are playing into this breakdown and breakout approach here, and that is whether or not we're going to hold here at this 596 mark. This is an historic line that's pretty much just an average of the touch points that we've had since I've been charting it pretty much the last 2 or 3 years. This is a very important liquidity zone that we're in right now, and right now we're at the bottom of it. And historically, this aligns with what we're seeing with Bitcoin. Historically, when we tap into the one below here, even if we got this breakdown into this zone, as you can see here, we never close in this zone. It's extremely rare. Even here, I'm looking back over the last year, and we haven't closed. We've went into this zone, this bottom long zone below the 596 mark, even had some flash crashes down to the low fives, high fours, but we have not closed there on a daily. So when we go there, typically that is, and it's a cash grab from that pool of liquidity. And then we close up higher, either like back into this zone, or it starts a retest to the higher part of the zone of around like 7 cents. And now we see the weakening of this current trend here, this bouncing from the bottom of this trend, 596, to the 14-day MA. And then obviously we have the weakening of this. So this aligns with historically where this was historically saying that this is going to go. Saying that if we can either just have the breakout from here and this trend upward, or we can have that breakdown into that liquidity zone, and then we'll have typically we'll have a bigger move up into the next zone, which is like the top of that is going to be around the 7 cent mark. So that basically aligns with what we're seeing for Bitcoin, with what we're seeing with Bitcoin, saying that this is more than likely going to have an upward trend here relatively soon. Probably the next 24, 48 hours, we'll have some decision-making candles. So let's take a look. I'm curious to see what Ethereum is looking like. It normally mimics Bitcoin. Yep, that's exactly what's going on. A little bit more green on the upside here is this trending upward, which is different from Bitcoin's, and it's already above its 14-day and headed toward the 72-day as well. So, but yeah, other than that, it's almost identical to what we're seeing here with the candle we're seeing with Bitcoin. So we know that liquidity likes to kind of trend together. So that's not a surprise here. So this is on track to saying that, okay, well, it looks like we're going to have some liquidity go fall into the market. Now, that's not indicative saying that this is the beginning of a bull run or something like that. It's just saying that there is the liquidity has been weak flowing into the market for the last week or so. And then typically if it's not enough liquidity to sustain its current levels, you'll see some decision making coming in, whether that means a breakdown, and then people come in and say, okay, well, this is a better deal than where we've been for the last 2 weeks. And that'll trigger some liquidity coming into the asset, and you'll either see a continuation of the fall if it's not enough liquidity, or you'll see kind of like a rebound. You'll have it kind of bounce back up from that current level, or just bounce, or just pretty much grow from the level it's at now into the next pool of liquidity. So that's kind of what we're witnessing right here across the board, and what we're seeing with Ethereum kind of confirms that, because those two kind of trend together. We'll check one more thing here on the shorts, and then I'm curious. Yeah, shorts are, I'm not gonna say non-existent, but they've certainly killed their movement to coexist here with the movement that we've been seeing. This is Dogecoin shorts, by the way. So yeah, so nothing alarming that's going on right here. Very minimal movements. They got out of that position last time we talked about it, which is typically what they'll do. When you see some orders and stuff like that coming in, you'll see a trend where they'll come in, but then normally they'll exit all at once and make sure that they're not in a position here to get themselves wrecked. So we'll see. The last biggest move we've had here was around, I think it was like late October, when Elon purchased Twitter. That was around like October 25th. So pretty much like a month from now, a year ago. So this here is going to give us some more accurate details on a year to date as far as for charting. So I'm very curious to see about where we're going to be in that time frame. Because prior to that, that Elon purchased a year ago of Twitter, we were roughly where we are right now. So even with people are saying, oh, where is the bottom of the bear market and stuff like that, and all those wild swings. This has historically been the bottom for Dogecoin. So like I said, if we go down lower than this, we typically have that rally and grab liquidity, and we bounce back up relatively quickly. So even though there's an opportunity to get some cheaper than where we are right now, based off of the last 12 plus months, this is historically the low, and that's with negative news, that's with shorting, that's with the new coins being mined, that's with everything. This is where Dogecoin has historically settled for like last 2-3 years. So this is at this point you can feel comfortable saying this is the bottom range for Doge. And I've been saying it for a while because we do have the capability of going a little lower than this, but overall this middle layer here, let me make sure I highlight it. This is where Dogecoin rests when there's not news, or there's not a massive amount of liquidity flowing into the market. So this here, even me personally, this is my acquisition zone here. Down here, obviously, it's ideal, because if you're able to catch something down here, obviously, you are in the green relatively quickly. And you can't, I'm not going to say you can't, but historically, you're not going to see red even for more than a day, because typically you have to catch it down here. And that's more so on an hour chart if you want to see some particular movements. But as I said earlier, we don't close in this range. So that is kind of like where we are right now. And if we take a look here, like the next few days, we're going to see some more of the macros come into play, kind of get an idea of like the front runners and stuff like that for the presidential election. We're going to get some updated numbers here in like the housing market, as I talked about in my my broader macro videos like a few days ago. These are all going to play huge roles in the liquidity and stuff that's flowing around the market. So I'll be posting more updates on the macro side. This is more on the micro here of the coin. So kind of just expect that that deciding factor to kind of fall into play within the next 24 to 48 hours. All right, let me know what you guys think. I will see you guys in the next video. Thank you guys for watching. If you haven't, certainly please subscribe and like the video. Thanks.